So, good afternoon, everyone. So, as you all know, our new annual budget came in. There are a lot of changes for Inter as well. Around 80 pages. The annual budget memorandum for direct tax is around 80 pages. For final, there are a lot of changes. For Inter also, there are changes, especially when it comes to the 115 BAC and slab rate standard deduction under 115 BAC got changed. Capital gains rate change ஆயிடுச்சு. TDS changes இருக்கு. TCS also changed. Standard deduction for salary for old is 50, new 75. But for you, again, you don't have to worry. Why? Because for September and for Jan 25, it's not applicable. But for May 25, it will be applicable. I mean, that's not your concern because anyways, you have no plans to articleship definitely varuvaru. The changes all applicable avaru because next year when you file return, the PY is 24-25. So on the time la kandipa padikkanum adu vandu. Okay. So ipdida. How can I purchase your material? Website la irukku adu. Okay. Website la irukku. You can actually visit the website and check. Okay. avada anga vandu buy panna option irukku. Yes. And you also can have a look at this materials. Okay, I've kept this materials over here. Yes. Unrealized rent has satisfied rule 4 or not, then what we have to do? Then you can assume, write your assumption, that's it. If the question is actually silent about the unrealized rent portion, then write the assumption, okay? You can assume assume all the conditions have satisfied or otherwise also is fine. Okay. Yeah, so shall we solve some questions? Shall we solve some questions? All right. So, you want easy question or a tough question? We only have tough questions, okay? So, tough ella illa aanalu paravalla. So, we have one question pending in salary, okay? So, let's finish that question first, friends. So, can you please go through question number 5 and give me the answer? Idu vandu May 23. What's the weightage? Array, what is the weightage? 7 marks, May 23. Salary head question. Okay, just go through this. What's the page number? It's page 2, right? Page 2. This is page number 2. Engineering college employers bonus son's education expenses. Is it taxable? Yes. We can claim children education allowance. It's not allowance, it's perquisite, right? So you cannot claim the allowance, okay? It's perquisite. It is taxable. Maximum 10 minutes, okay? Try to finish it within that time because we have questions in house property also. Then you have to start PGBP today. No. Today's budgeted amendments are not applicable for September. Okay, don't worry. January also not applicable because the PY will be 23-25 itself. 23-24, not 25, sorry. 23-24 itself. Normally it is like that. Examination is in which assessment year? That is the applicable assessment year. Okay, that's how normally institute set the questions. Okay, examination in which AY? That AY you have to follow always. So your September examination is on which AY? September examination is on which AY? 24-25 AY. That means previous year is 23-24. So that's what I said. January 25 is also in 24-25 AY. So the PY will be 23-24 only. And none of the budgetary amendments are retrospective amendments. So you don't have to worry about any of the changes. Okay. Yeah, your attempt is May 25, then there will be changes. That's it. The concepts are almost the same, but changes are there. Especially when it comes to 115 BAC and all, changes are there. And it's too early to say the changes. Why? Because these are just proposals. This have been put in front of the house. Now we don't know what are the other things that is about to come. Okay. So these are the proposals. Right now they have given a proposal. So most of them will be I think it will be passed, but there will be clarifications. It will get passed because they have the majority, of course. Don't worry. But there will be more clarifications will come. When it comes to the income tax law, lot of explanations, clarifications also will come. So shall we do it together? How many of you have an answer? Please raise your hands. Excellent. So past this question, May 23, 7 marks. Okay, so we will solve it together. Yes, online friends, very good. A lot of you are giving me answers. Excellent. Very good. Superb. So, Mr. Rohan retired from QR, some private sector company, on 31st March 2024 after completing 28 years and 3 months of service. He received the following sums or gifts on his retirement. Okay. Gratuity 7,50,000. He had been covered under payment of the Gratuities Act. Then leave encashment is there. Crockery set he got. He drew a basic salary of 25,000 per month along with 50% basic salary as DNS allowance, not forming part of the retirement benefit. For the period from 1st April 23 to 31st March 2024. During the year, his employer provided him with a motor car of 1800cc, which was used by him and his family solely for personal purpose. The cost of fuel and repairs were met by Mr. Mohan itself, and the car was purchased by the employer on 1st April 2022 at a cost of 8 lakh. The salary of driver amounting to 10,000 per month was met by the employer only. Okay. So upon retirement, he gave the car back to the employer. You are required to compute the taxable salary of assuming that he neither claims any relief nor does not opt for 115 BAC. So let's compute it together. So we will start with the basic salary first of all. So the same format that we have used earlier, okay? And how much is the basic salary? Basic salary, let's compute the basic salary. So the question says, he was drawing a basic salary of 25,000 along with the DA of 50% of basic salary for a period from April to March 2024. Then he got retired when? On 31st March only he got retired. So for the whole year, he was actually working, and on the last day, he got retired. So 12 months basic salary means 25 lakhs into 12 months. How much is the sum? 25,000 into 12, it will be how much, friends? 3 lakhs. Now, DNS allowance is 50% of the basic salary. That will be 1,50,000. Right. And it does not form part of the retirement benefit. Okay. Now, what is next? So, we will do one thing. We have started with this paragraph and this paragraph is over. Now, we will deal with the other items here. Okay. We will start with the gratuity now. Gratuity of 7,50,000, he was covered under payment of Gratuities Act. So, it is on account of retirement and hence you can claim exemption. And let's compute the exemption. Okay. So, gratuity. How much is the original gratuity or actual gratuity limit? Actual gratuity received 7,50,000, and you can claim an exemption. And can you tell me how much is the exemption? He's covered under payment of Gratuities Act. So the first limit is 20 lakh or actual gratuity received of 7,50,000 or 15 by 26 into last drawn salary. And last drawn salary will be how much? 25,000 plus 25,000 plus 12,500. So 25,000 plus 12,500 into completed year of service. 28. And can you help me with the computation? 6 lakh 5,000. 770, 769, both are fine. No problem. I'll take round of figure. 770. Both are fine. 769 or 770, whatever you write, no problem. Whichever is lower. 770. Can you help me with the math? 230. You can write 231 also, depends upon the amount that you have taken. Now, what is next? Gratuity is done. Leave encashment of 3,25,000 for 210 days leave balance in his account. He was credited with 30 days leave for every, okay, 1 second friends. he has been credited with 30 days leave for every completed year. So it's perfect. 30 days correctly for every completed year. So we'll do one thing. We will compute the leave travel concession. First of all, let's write the leave travel concession down. So how much is the leave, not leave travel concession, sorry, leave encashment. Leave encashment. How much is the amount? 3 lakh? 3,25,000 is the total amount. Now, from that, you can deduct what the exemption and how much is the exemption. For that, we will write a separate working note. Okay. How much is the exemption, friends? List of the following. What is the first one? First limit? 25 lakh is the first limit. And what is number 2? Actual leave encashment received, that is 3,25,000. And what is number 3? Last 10 months standard salary. Here it is only basic salary. Why? DA does not form part of the retirement benefit. So last 10 months basic salary, it will be 2,50,000 because last drawn basic salary is 25,000 into 10 will be 2,50,000. Now what is the last limit? Cash equivalent of leave. How many leaves he have? How many leaves he had? 210 by 30 into 25,000 into. No. You don't have to take a number of years. Okay. Only cash equivalent of leave. How much is that? 1 lakh. Come again. 1,75,000. Oh, the 1,75,000 round figure. Okay. Now, can you help me whichever is lower? 1,75,000. So 175. If you deduct, can you help me? How much will be? 1,50,000 will be the taxable amount out of it. Moving on with the next one. What is next? We have a crockery set worth 4,500 from his employer at a favorable party which was organized by the HR department a day before his retirement. Fully exempted because it is less than 5,000. So nothing, there is no point of any confusion. Now, further, during the year, his employer provided him a motor car of 1.8 liters, that is 1,800 cc, which was used by him. Provided a car means car owned by the employer and used by the employee for personal purpose only. So, dual benefit. And how about the maintenance and running? Cost of fuel and repair were met by Mr. Rohan. Mr. Rohan is the employee. So, not dual benefit, only the ownership. The car was purchased by the employer at a cost of 8 lakh and salary of driver amounting to 10,000 per month was made by the employer only. So, ownership is there, driver salary also will come. Are you with me? Are you with me? So, let's value the perquisite. So, valuation of perquisite. Value of car. First of all, ownership. How much is that? 8 lakh. Into 10% for the whole year. How much is that? 80,000. Now, driver salary. Driver salary is, how much is the driver salary? 10,000 per month into 12 months, right? 10,000 into 12 will be 1,20,000. So, you tell me how much is the total value? 2 lakh. Now, what's next? What is next? Salary amount we have done. Upon retirement, he gave that car back to the employer. I think this is it, right? This is such an easy question because we have done a question which is more lengthier than this. Okay, so this is like 7-mark question is nothing. So can you help me with the gross salary? Only this much. Okay, gross salary. Can you tell me the gross salary? 9 lakh? 44,230. From that you can deduct STD, standard deduction. How much is standard deduction? Come again? Motor? Transfer of motor vehicle. Why? Return back means what? He have given back. Yes. So can you help me with the taxable income? 894. Mobile number? 230. Yes. No. You don't have to use it because it is exclusively used for personal purpose. No statutory figures will come. Okay, Ashwin, it's exclusively used for personal purpose. So statutory figures will not come. Refer the chart. Come again? Value of car. The total cost of the car is 8 lakh, right? For a year, 10%. Yes. Driver salary is it should be incurred by the employee, but sponsored by the employer. So that also will become his taxable perquisite. 900 and? Why? Because that will only come if it is mixed usage, personal as well as official. The question itself says that what? It is exclusively used by them. He has a family, used by him and his family solely for personal purpose. So why should you take statutory values? You don't have to take statutory values. Got it? Provide. Why? Because employer have paid it. That is also a running charge. Running and maintenance means fuel, repair, driver salary also is a running expense. Out of that, repair and fuel met by him only, but driver salary met by the employer. So driver salary of 10,000 into 12 plus ownership of 8 lakh into 10% will be the taxable perquisite. Got it? Confused with the leave encashment for last calculation day. Visit the, check the chart. Last calculation is cash equivalent of leave at the credit of employer. That means how many leaves you have? 210 leaves they had. Divided by 30 into last drawn standard salary based on last 10 months average. Here there is no change in the salary. And the standard salary is only the basic salary. Why? Because DA does not form part of the retirement benefit. And hence it become 25,000. You got it? Santiga. How do you spell it? Santiga. What if the car is used only for official? Nothing taxable. Yes. So shall we solve another problem? Yes. So it is related to fantastic question it is. Okay. This is one of my favorite questions. Question 6. RTP November 2020. House property. Answer for previous sum alone, just for a second. Okay, 1 second I can show. 1 second mudinjadu. I'll display it in full, don't worry. Done? Okay. Yeah, question 6. RTP November 20. Ready with the answer? So you have to check the different permutations and combinations, okay? And you have to opt the most beneficial way. Which one is better or which option is better? Option 1, option 2, option 3. I don't remember. We have to do it together, okay? House 1. Let's see. 115 BAC house 2. What is this? BAC and all is... Who's that? Who's doing it in BAC? Yeah. So shall we do it together? All right. Listen. Miss Pihu has 3 houses, all of which are self-occupied. The particulars of these houses are given below. Municipal valuation is there, fair rent is there, standard is there. Date of completion is given. Municipal taxes payable during the year paid for house 2 and 3 only. Okay. So house 1, they haven't paid any municipal taxes. They paid only for 2 and 3. Interest on money borrowed for repair is given 75,000. You are required to compute Pihu's income from house property for assessment year 24-25 and suggest which houses should be opted by Pihu to be assessed as self-occupied so that her tax liability is minimum. So let's see. To solve such question, normally we use a method. Okay, I'll teach you what exactly is this method. Listen. Shh. First of all, the method that I am about to take, first of all, we compute the gross annual value of all the property. Okay, the first thing to do in similar question in exam is compute the GAV of all the property, assuming it is a deemed let out. Then you need to compare. Then you can quickly compare it in option 1 and option 2 and option 3 without burning your head much. Are you with me? So what we are doing is, say, computation of GAV. We'll take house 1, house 2, house 3. Tell me, in house 1, municipal value is there, fair rent is there. Whichever is higher, that means municipal value. Compare it with the standard rent and whichever is lower. So 1 lakh will be the gross annual value if it is a deemed let out property. Yes or no? In case of house 1, 1 lakh will be the gross annual value. So GAV for house 1 will be 1 lakh. How about house 2? Municipal value fair and higher means 185. With the standard rent 190, lower means 185. So 185 will be the GAV in house property 2. How about house property 3? Municipal value and fair rent have to be compared and pick the higher, and that with the standard rent and pick the lower. That will be 1,30,000. 1,30,000. Now, we will consider municipal taxes paid. For house 1, there is nothing paid. For house 2, 9% only they are saying. 9% of what? Municipal value. So 9% of 1,20,000. So 9% into 1.20 lakh. How much is the sum? 10,800. Then third case, 1,20,000 into 10%. That will be 12,000. And how much will be the net annual value? First case, 1 lakh itself. Second case, come again, 1 lakh, 74,200. And third case, 18,000. So in first case, why we haven't deducted municipal tax? Because it says that only for 2 and 3 only they have paid. That means 1 they haven't paid. Now we will deduct the standard deduction as well. Can you help me in standard deduction? First case, 30,000. Second case, 50,000. 52,260. Is that so? Third case, 34,000. 35,400. Now, before deducting the interest, don't deduct the interest because the type of property, if it differs, interest also differs. So we are computing a value called as NAV minus standard deduction. How much is NAV minus standard deduction? First case it is 70,000. Second case, 1,41,021. Okay, 1,21,940. Third case, 82,600. Let it be there. Now we will compare different options. Okay. Now based on this chart, we will compare different options and we will complete the answer. Now option 1. Say option 1, I am taking house 1 and house 2 as self-occupied. And we will consider house 3 as deemed let out. And we will compare. Okay. So house 1 and house 2 self-occupied means our NAV minus standard deduction figure will be nil. Yes or no? Now, house 3, it will be 82,600. Okay, wait. Okay, tenid, you wait. Okay, that's what I'm about to do. Okay, just wait. Now, how about interest on loan? What to do with interest on loan? House 1, we don't have any interest on loan. House 2 in this option is self-occupied property, and the interest is actually taken for repair of the property. So you tell me how much is the maximum deduction? 30,000 is the maximum deduction. And case 3, there is no deduction. So this will be 30,000 loss. It is 82,600 profit, and the first case nothing. So can you net off and tell me how much is the income? 52,600 is the income from property. Are you with me? So if you go for option 1, income from property will be 52,600. Now we will check option 2. Option 2. What is option 2? We will take another option. That is house property 1 and house property 3 self-occupied. And I am considering house property 2 as deemed let out. Now, can you help me with the computation? If house property 1 and house property 2, if it is self-occupied, house property 3, if it is self-occupied, then NAV minus standard deduction will be how much in 1 and 3? That we have already computed. 1, it will be 0. 3, it will be 0. Then, how about 2? 121,940. 121,940. Now, friends, from this we will deduct the interest. House 1, no interest. House 3, no interest. House 2, you can deduct that entire 75,000. Why? Because for let out, deemed let out property, there is no ceiling limit for the interest. Are you with me? Now, can you tell me how much is the figures? 1, nil, and this will be 940. So this is the income in option number 2. Now we will think about option number 3. So option 3, we will say house property 2 and house property 3 as self-occupied. Okay. And house property 1 will be deemed let out. Based on this, we will solve. Now, can you help me with the NAV minus standard deduction of 2 and 3 will be nil. And how about 1? 70,000. Now, interest on loan in house property 2 is how much? You can claim up to 30,000 since it is repair and self-occupied. You can claim up to 30. House property 3 nil, house property 1 nil. Can you tell me how much will be the impact? First case loss 30,000. Second case nil. Third case income 70,000. Can you net it off and tell me how much will be the income? Come again? 40,000. Now you tell me which is the best option. In our computation, option 3 will be better because option 1 52,600. Option 2 46,940. Option 3 40,000. Yes, third option is better. So the conclusion will be house property 2 and house property 3 self-occupied and house property 1 deemed let out. That should be the final answer. Yeah. This is option 1. House option 1. Hope everybody understood. Online friends, please respond. Have you understood? It's a kind of good question. Okay. Yes. Yep. And we'll do something innovative. Okay. Rather than sticking onto one head, now we will mix up 2 heads. Read question number 7 and give me the answer. It's a fantastic question. It's May 19, 8 marks. Okay. May 2019, 8 mark question it is. And there is some problem in this question. Means one sentence is there. That is in the next page. Okay. So, determine taxable income of Madhavan for assessment year 24-25. All working should form part of your answer. There is nothing substantial in that page. Okay. So, it is a 8 mark question, May 19. So, please solve it together. I mean, first you solve it by yourself, then we will solve it together. Okay. Yeah, you want the answer? Okay, I'll show it. 1 second. Page 1. Question, I think you have the sheet, right? Question sheet is shared in the group, okay? It's in the WhatsApp group, right? The question sheet is there in the WhatsApp group. Last question answer only I've shown right now, okay? Yeah, now you wait. Let the others solve the question, okay? Just now only I show you the answer. We'll show it again. Please take the screenshot or whatever it is. Yes. What is ground rent? You tell me. Huh? It's Nilavadage. Maybe that person have taken that particular land on a kind of a lease or something, and he's paying that ground rent, okay? You should not, that you decide what to do. I've clearly told in the morning what to do with the ground rent, insurance premium, etc., etc. For all those things you are getting 30% standard deduction. That's it. Okay, nothing more than that. See, repairs, insurance premium, ground rent, extras, etc. are your expenses. Okay. Say I'm this building owner. This land is not owned by me. I've constructed a building on this. And you tell me, will I get rent or will I have to pay rent? I have to pay rent for the land. Taxable salary is there. House property 1, house property 2. Okay, very good. So shall we do it together? Very good. So listen, this is actually it looks like a very tricky question, okay? But let me tell you, if you properly read and understand the question, then there is nothing. Listen, shh. Now keep quiet and listen. Mr. Madhavan is a finance manager in Star Private Limited. He gets a salary of 30,000 per month. So he has some salary income. So we will straight away start writing the sum, okay? So salary is there. Salary head is there. And how much is the basic salary? 30,000 per month into 12 months. And total will be 3,60,000. Let it be there. Now, what are the other things? He owns 2 houses, one of which have been let out to his employer. So, house 1 have been given to his employer, and which in turn is provided to him as a rent-free accommodation. So, you tell me what to do with that. Think about this building. Think about this building. Say this is owned by me. This is owned by me. I have rented this building to my employer. I have rented this building to my employer, so that my employer is required to pay me a rent. Are you with me? Are you with me? And the employer did one more thing. Employer, after taking it for rent, told me to stay here. Told me to what? Stay here. So I will say that I'm getting dual benefit. From the same house, I'm getting dual benefit. 1, I'm getting rent. Number 2, my house is occupied actually. It's rented out. Now I should take a house outside for rent. Yes or no? Because right now I have given my house property on rent to my employer. Now I should take a house outside on rent. But not required. The employer have given me the same house back as a rent-free accommodation. So dual benefit number 1, the rental income, the house property head, I have to treat it as a let-out property to my employer. And treatment number 2, under salary, I have to compute RFA. say. Or if you are still confused, imagine like this. I've given this house on rent to my employer, and the employer have provided me some other house. My employer have given me some other house as a RFA. Then the rent that I'm getting from this property will be my rental income. And the benefit that I'm getting as a rent-free accommodation have to be valued under salary. Instead of giving another house, my employer told me to stay in this house itself. Are you with me? Are you with me? So two treatments are there. One under the head salary and number two under house property as a let out portion. Are you all with me? First, let's finish the things under salary. Now you listen. Fair rent, municipal value, everything is given. Municipal taxes, repair, insurance premium on building, ground rent, nature of occupation. 17,000 were paid as interest on loan taken by mortgaging house 1 for the construction of house 2. During the previous year 23-24, Mr. Madhavan purchased the rural agriculture land for 2,50,000 and stamp duty value is 3 lakh. Then determine the taxable income of Madhavan for assessment year 24-25. All workings should form part of your answer and main 19 8 mark they have tested this. Okay. The mark weightage is around 8 mark. Maybe 4 mark for salary head and 4 mark for house property head. That I don't know. Simply guessed it. Okay. So 8 mark the weightages. Now you tell me, first of all, let's compute the rent-free accommodation. So RFA. How do you compute rent-free accommodation? How do you compute rent-free accommodation? Depends upon the type of employee you are. You are not a government employee, so don't even think about license fee. Now the house is not owned by the employer because you are the owner. Employer have taken that house on lease from you. Are you with me? So what you need to do, the house is actually taken on rent or lease. Now how to value? Either the rental amount paid by my employer or 15% till August, 10% thereafter. Do you remember yesterday? This has all the complication. Right now, this has all the complication. So let's value everything. We'll write a working note for this valuation, okay? That's why I selected this question because I love this question. It does all the permutation combination, all the possible complications it have. So listen. See, from the perspective of employer has taken house 1 on rent. Yes? Yes. I didn't say it is owned by employer. Come again? Yesterday in the valuation, you were there yesterday in the classes? You have the handout with you? Turn the page and take RFA. அதுக்கப்புறம் இது படி, the B portion படி. அது with effect from when? 1st September 23 இல்லையா? Now அதுக்கப்புறம் main chartered, அதுக்கப்புறம் இது படி. அதுல என்ன இருக்கு? Lower of 15 of the salary paid or rent payable by the employer. Combined interpret பண்ணினா என்ன பண்ணணும்? Till 1st April till 31st August 15%. With effect from 1st September 23 till 31st March 24, 10%. புரிஞ்சுதா? Yes. இது படிக்கணும், okay? Every day revision doesn't mean revision for me. It's revision for you, okay? So, listen, what we need to do is, where were we? I was writing this. Employer has taken house 1 on rent from employee and provided the same house as rent-free accommodation to employee. So, from 1st April 2023 to 31st August 2023, from 1st April 2023 till 31st August 2023, how many months are there? 5 months. For 5 months, how much is the rental income? Sorry, rental expenses by employer. How much is the monthly rent? Oh, what is the monthly rent for house 1? See, where is actual rent? Fair rent, actual rent, yeah. 65,000 is the actual rent. House 1 have been taken on rent by the employer. So house 1, actual rent means that actual rent is paid by employer to the employee. Yes or no? Yes or no? Don't mathematically search for the figures in the question. Okay, first you understand what exactly happened. Okay, employee have given his house 1 to the employer and he got actual rent as 65,000. Now, is it 65? Yes, 65,000. And now you tell me how much is the rent paid by the employer? 65,000 for the whole year. Now, for 5 months, how much will be the amount? 65,000 for the whole year into 5 by 12. How much is that? 27,083. All right. Now, how much is the salary for 5 months? Salary for 5 months for the employee. 30,000 into 5. That will be 1,50,000 into 15%. Because it is for the 5 months, it is 15. How much is 15%? 22,500. Pick whichever is lower. Which is the lower? 22,500. Now you have to compute for the rest 7 months. For the rest 7 months, rental expenses for the employer will be 65,000 divided by 12 into 7. How much is that? 37,917. Okay, 917. Now, how about as salary? Salary will be 30,000 into 7 into 10%. That is a percentage. How much is that? 21,000. Whichever is lower means 21,000. You can do it together, okay, no problem. You can do it together also. Now, can you tell me how much is the taxable value of perquisite? 43,500 is the taxable value of perquisite. Are you all with me? Yeah, take a note of this, okay. This is the crux. Yes. So how much is the total RFA? 43,500. Now, can you tell me how much is the gross salary? Gross salary 4,03,500. From that you can deduct what? Standard deduction at 50,000. And how much is 50,000 standard deduction? 3,53,500. 500. Now, we will compute the house property income now. House property. We will take house 1. It is let out. And we have house 2 also. That is also let out. House 1 let out, house 2 also let out. So we have, first of all, I am computing expected rent for house 1 and house 2. Let's compute the expected rent from the question itself. So house 1, how do you compute expected rent? You take the fair rent and compare it with the municipal value and pick the higher. Which is higher? 75,000. Is there any standard rent in the question? They are not mentioning any standard rent. So 75,000 itself is the expected rent. So we were taking 75,000 rupees as the expected rent. How about house 2? Fair rent and municipal value, you compare these two and pick the 1,95,000. So that will be the expected rent in house 2. How much is the actual rent, friends? Actual rent. First case, 65,000, and second case, 2,85,000. Whichever is higher shall be the GAV. How much is the GAV in case 1? GAV in case 1 will be 75,000 and case 2 will be 2,85,000. From that you can deduct what? Municipal taxes paid. Are they saying anything in relation to the municipal taxes? They are saying municipal taxes paid 18 and 70. So 18,000 and 70,000. 18,000 is there for house 1 and 70,000 is there for house 2. And can you tell me how much is the NAV now? 57,000 for house 1 and 2,15,000 for house 2. Now you compute standard deduction at 30%. And how much is 30% of 57,000? 17,100. 17,100. And how about house 2? 64,500 for house 2. Now, how about interest on loan? Are they saying anything in relation to the interest on loan? Yes. What they are saying is 17,000 was paid as interest on loan taken by mortgaging house 1 for construction of house 2. So you tell me, for which property you have taken loan? For which property have you taken a loan? House 2. By mortgaging house 1. What is mortgage? It's kind of a pledge. When you pledge immobile property, we used to say mortgage. So house 2 is the loan and interest is 17,000 and there is no ceiling limit since it is a let out property. For house 1, there is no interest. Can you tell me how much is the income from house property? Income from house property, first one, 39,900. And second case, 1,33,500. And now can you tell me how much is the total income from house property? Income from house property. 1,73,400. Now you need to compute both. That is 353,500 plus 1,73,500. How much is the total income of that person? 5,36,000, 26,900. This is the final answer. How many of you got right answers? Raise your hands. Very good. Excellent. Even though the question looks very simple, it's like you have to be very careful, otherwise you will easily go wrong. RFA, okay. Rent-free accommodation. Listen, I'll explain that again. Listen. Shh. Sri, rent-free accommodation, yesterday what we have learned is, we have learned one chart as well as one amendment. Okay. So, sir, can we take like computing the whole hire charge and compute the hire charge separately for 10 and 15 and add them together and compare it? Yeah. That also you can do, because there is no instruction from income tax department that you have to do it separately. That also is fine. Ashwin, you can do that, no problem. Okay. Institute itself is not explaining, like they haven't given with a criteria. They haven't came up with a criteria till now. So it's up to you. But you have to do that, that's it. For the 5 months, it should be 15%, and for the remaining 7, it should be 10%. Yes. Either together or two separate computation, you can do, no problem. Yeah. So listen, the RFA thing here, listen. The RFA thing here is, see, the house property that the employee had, he have given it on rent to, say, imagine some other person. Okay, he have given that property as a rented property to some other person. He had 2 properties and both of the properties have given as rent to some other person. And this employer have given him some other property as a rent-free accommodation. Then what will you do? Say, I am an employee. I had 2 properties. One this and one a nearby building. I have given both the properties on rent. Then both the properties are let out property. And for me, I should have a house. I should take a house on rent because my both owned houses are on rent. Now I should take a house on rent. But my employer say, don't worry, you stay in another property because my employer has given me another property. Similarly, one of my property have been given to the employer and the employer in turn given it back to me. Are you with me? Yeah, the treatment is same. If it is outside or if it is to the employer. I hope it is clear now. இருக்கு ஆனா இல்லையா? வீடு இருக்கு ஆனா இல்ல. Nothing. Oh, you are saying this answer. I thought you are giving me some. Sir, what about rural agri land? Yeah, I forgot about that. Listen, rural agriculture land that you will learn in IFOS, okay? Rural agri land, if you purchase, that's actually a purchase. It's not at all a sale. So rural agri land, for the purchase, you have to do nothing. Okay, you can simply ignore that. You are purchasing a rural agri land. There is no income tax implication for that. Completed? Is there anybody who's still writing the sum? Yeah, complete. Online also, please complete. Mortgage interest, அது நல்லா படி Ali Nawaz. Mortgage interest alla illa. You have mortgage house property 1. For what? For taken a loan for the construction of house property 2. So you have taken a loan for house property 2. That's why we have claimed that 70,000, not 70,000, what is the interest? 17,000 as a deduction, okay? Okay. Yes. And he will not get rental income also. Okay. என்ன பண்ண முடியுடா அவன் கொடுத்துட்டே அது. You're thinking from another perspective. Yeah. But for that he should come to us initially. But 99% people will do everything. Then only for filing return only they will come to us. The question dana. This is created only for testing you. That's it. And first of all, no person will rent out both the properties to someone else because I have to be in street. Okay. So அது வந்து if I'm mortgage house property 1 and doing repair in house property 1, even this case also we can deduct up to 30. Yes, if it is self-occupied. But this is basically let out property, so there is no ceiling limit. Okay. Purinjada? This is actually let out property, so there is no ceiling limit. If it is self-occupied property, there will be a limit. Yeah. All right. So these are the things that I want to highlight in house property. Let me make you solve one more question in house property. Okay. I'll give you something not very challenging, but it's a fantastic thing. Okay. But we have a small problem. This question is in 2 pages, so we'll do one thing. Give me a second, I'll make it in 1 page, okay? Oh, thank you. Yeah, friends. So can you read this question? Can you read this question and give me the answer? It's a fantastic question, okay? It is not there in the question sheet. It's not a past exam question. If I'm not wrong, it will be either MTP or it will be your study material question, okay? Study material. Come again? It is co-ownership plus there are other things also. Study material. It's a fantastic question. Principal tax. In the PY itself, you have to pay. Yes. In house property, if you want to claim deduction, the respect to PY itself, you have to pay. Ready with the answer? No. How about online friends? Arun and Bimal, income from house property, 95,850. I think it is right. Yes, Huma. Wow, good, very good. Maunika, I think it is right. Excellent. Income 210, 300. Arun, Bimal. Okay. Listen. I hope at least some of you have an answer. How many of you have an answer at least whether it is right or not? Okay. So let's solve it together. Okay. Don't worry. Let's solve it together because we have to start a PGBP today. Okay. So soon after finishing this, we'll be starting break day. Break mukyo illa PGBP ta mukyo. Okay. Yeah. So don't worry. I'll give you a break also. Okay. Don't worry. So what are they saying? Two brothers, Arun and Bimal, are co-owners of a property. Okay, Arun and Bimal is there. Both are co-owners of a property. Shh, keep quiet and listen. With equal share, the property was constructed during the financial year 98-99. So 2-3 things are there. Number one, the construction is in 98-99 and the property is a co-owned property. The property consists of 8 identical units and it's situated at Kochi. So say, imagine this is the property. Okay. How many units it have? 1, 2, 3, 4, 5, 6, 7 and one more thing, that is 8. So it have 8 units. Okay. These are identical units. Now, during the financial year 23-24, each co-owner occupied 1 unit for residence and the balance of 6 units were let out at the rent of 12,000 per month. So, say Arun occupied 1 property. Occupied means for self-occupation. And Bimal also occupied 1 property and the remaining 6 have been let out. Are you with me? So, the remaining 6 have been let out. Then, what's next? The municipal value of the house is given and the remaining 6 have been let out at 12,000 per month per unit. What do you mean by 12,000 per month per unit? What do you mean by 12,000 per month per unit? Each one property will get in a month rupees 12,000. Okay. Now, the municipal value of the house, the entire house municipal value is given 9 lakh and the municipal taxes for the entire property it is 20,000, 20% of the municipal value, which were paid during the year. And the other expenses are follows. Other expenses are also given. Repair is there, insurance premium is there, interest payable on loan taken for construction of house is there. One of the let out units remain vacant for 4 months during the year. Now there is a problem. What is the problem? See, out of the 6, 1 is vacant for how many days? How many months? 4 months. Is it Arun's property or Bimal's property? The vacant, is it Arun's property or Bimal's property. That we don't know because the question has not specified. So they will not have a specific ownership. It will be like a common. Exactly. So what you need to do is you compute the income from 6 units, then you split it between Arun and Bimal. Are you with me? First you compute the income from the 6 units, then you split it between Arun and Bimal. That is the only way that we can solve this question. Why? Because each owner's specific share in that particular unit is not mentioned in the question. Are you with me? Are you with me? So if you get stuck with something, then always think in different way. If in exam, if you get stuck with something, always think in a different way. Are you with me? So Arun could not occupy his unit for 6 months. So it is unoccupied property as he transferred to Chennai. No problem. So he does not own any other house. So the other income of Arun and Bimal were 290 and 180 respectively for the financial year 23-24. Compute the income under the head income from house property and the total income of total income of two brothers for assessment year 24-25. So we will do it together. First of all, let's finish off the 6 let out units effect. Okay. So listen. So computation of income of 6 let out units. Let's compute that first. So you tell me, do you have fair rent in this question? Are they mentioning fair rent in this question? No. Do you have municipal value? Yes. So you take the municipal value first. Municipal value of the total property is how much? 9 lakhs. Now, is there any standard rent in the question? Is there any standard rent? No. So the expected rent of the whole property will be 9 lakh only. Are you with me? So municipal value will be the expected rent. But how much is the expected rent of let out portion? Let out portion. This expected rent is for the entire property. Yes or no? So 9 lakh into 6 by 8. How much it will be? Why the 6 by 8? Out of 8 units, 6 units let out. So expected rent of let out units will be 9 lakh into 6 by 8. And can you help me with the math? 6 lakh 75,000. Now, how much is the actual rent? Actual rent will be for 5 units you received 12,000, right? 12,000 rupees per month into 12 months. And for 1 unit, you received 12,000 rupees only for 8 months because there was a 4-month vacancy for 1 unit. Now, can you help me with the math? How much is the total of this? Total 8 lakh 16,000. Are you all with me? So whichever is higher, which is higher? 8 lakh 16. So you tell me how much is the GAV? 8 lakh 16,000. Now, can you claim municipal taxes as a deduction? Yes, but not full, only for that 6 by 8 portion. So 9 lakh into, I think 20%, right? 20% into 6 by 8. And can you help me with the math? 1,35,000 rupees will be the municipal taxes paid. And how much is the NAV? NAV will be 6 lakh 81. 6 lakh 81,000 will be the net annual value. Are you all with me? From that, you can claim standard deduction at 30%. How much will be standard deduction of 8 lakh 31? 2 lakh 4,300. Is there any interest on loan? Yes. Interest on loan in total. How much is the total interest on loan? Total interest on loan is 3 lakh into 6 by 8. How much is the interest on for let out portion? 2 lakh 25,000. Now, how much is the total income of the let out to 6 units? 2 lakh 51,700. Now, this have to be splitted among Arun and Bimal. Are you all here? Now, we will change our computation method. We will consider Arun and Bimal. So, Arun and Bimal. Now for Arun, there is let out portion and self-occupied portion. Let out portion is there. Self-occupied portion is there. For Bimal also, let out is there. Self-occupied portion is there. First, we will compute the self-occupied portion. Okay. As you all know, NAV of self-occupied portion is nil. The only one deduction that you will get is interest on loan. How much is the interest on loan for Arun? See. Total interest was 3 lakh. Out of that, 225 is for the let out portion. So the remaining is 75. That 75 have to be divided between Arun and Bimal. Are you with me? Are you with me? Say, listen, the total interest is 3 lakh. Okay, 3 lakh was the total interest. Out of that, 225 we have taken for what? Let out portion. So the remaining will be 75 for the self-occupied, and this have to be divided between Arun and Bimal. How much is 75 divided by 2? 37,500 between Arun and Bimal, but you only will get how much? 30,000. Why 30,000? Because the construction of the property began in 98-99. You require a loan at the time of construction only. Are you with me? After 10 or 15 years of construction, will I take a loan for the property? No. So what we need to do is we need to restrict it to 30-30 each. So interest on loan here will be 30, and in the other case will be also 30. Now this will be loss 30, and the other case it is income that we have already computed. How much is that? 251,700 by 2. 1,25,850. That is for the let out portion. Here 1,25,850, and this will be loss of 30. Can you net off and tell me how much will be the amount? If you net off these two, how much will be the amount? For Arun, it will be 95,850, and Bimal also 95,850. Now note over here, they have other incomes also. This is from house property. And what are the other incomes? Arun have 2,90,000 rupees as other income, and Bimal have 1,80,000 rupees as other income. And can you help me with the total income computation? 3,85,850. And how about Bimal? 2,75,850. This is the final answer. Are you all with me? So please complete the answer. We have type. Done? So we'll do one thing. Let's go for a break, okay? Let's go for a break. So go relax and come back at 4:45. 20 minutes, that is it. 4:40. Come at 4:40. Okay, 20 minutes. So the next session is gonna be a little bit lengthy. So go enjoy, have a tea and come back. Okay, 4:40. Book answer having reduced interest 30K from both. Then that is wrong. Oh, the question in your book is different. Okay. Come again? Oh, here is different. Okay. Why? Because Naresh, the point is yeah. Yes. That's why. I think it's an MTP question. This is actually an MTP question, not your institute admittal question. This is actually an MTP question in my memory. That's why. VV, whoever you are, in your institute study material, there is a change in the year. That's why. Okay. It's not the same question. This is not the same question. Okay. Yeah, I'll show the answer once again. The full answer. Okay. Full answer, one page will be difficult, but I'll try. Interest will be 75 by 2 will be 30. 35 itself you will get. Because construction within 5 years, I don't know whether they're saying it's completed within 5 years. Construction completed within 5 years, then you can claim up to 2. Not saying anything. So assumption within 5 years. 225 anyways you will get. Out of 3 lakh. Yes, yes. Yes, Ashwin, you're right. For computing GAV, actual rent receivable should be taken after adjusting unrealized rent, provided you satisfy all the 4 conditions, and vacancy, yes.